Oh boy, today we're going to be talking about a possible stock market crash and how it could affect your retirement. Coming up next. Hi everybody, my name is Dee Burks and this is Retirement Rescue, where we talk about how to make money, save money, and create a great retirement. Well, right now as I'm filming this, it's October of 2021. There is a lot of conversation about a possible market crash or market pullback. Now, all of us over a certain age know that the market has cycles. It goes up, it comes down. But when it's been more than a decade, and it has been more than a decade since the last really big drop, we kind of forget. We forget how painful that was. And right now it's looking like things are going to converge where we are going to have a pullback. And that is making people very nervous, especially people who are looking at retiring in the next 5 to 10 years or people who are already retired. Now there are several things I really want to talk to you about what to do with your money if you're kind of nervous, but I'm also going to tell you what I'm doing with my money so you'll have an idea there of what I'm actually doing. Now, I want to say up front, this is not tax advice. This is not investment advice. I'm going to tell you what I see and what I'm doing with my money. Take it or leave it, your choice. But always ask your own advisors or get your own outside counsel before you do anything with your investments. There's the disclaimer. It's going to be on the screen too, but there's the disclaimer. But first, let's talk about the idea that when there is a lot of uncertainty, like there is starting to be right now, your risk tolerance goes down. Now, let me talk about what that means. You may have investments that you have been in for literally years. If you have a 401k, an IRA, those are tax-advantaged investment vehicles, which a lot of people have. Because that's where most of their retirement is, because it's from an employer. Maybe you have a 403b. They all work kind of the same as far as when you're investing. And you know, when you put that money in there, you don't really consciously think about it a lot. It comes out of your paycheck automatically. You don't even remember what your selections were for investments. That's a lot of people, okay? So it's not unusual for you to not even remember what's in there or know what's in there. But now that everything you're hearing on the news is talking about this nervous up and down of the stock market, now you're worried about it, and you should be. And one of the reasons I really wanted to do this video is I've had a couple of friends who were already retired. They're both women over the age of 70. And they have both been to see their financial advisor in the last month. And both of those advisors gave them this rosy picture, completely blew off their concerns. Oh, even if it dips a little, you can ride it out. They're already living on that money that is complete BS. If you have an advisor who is not being extremely cautious right now, and you're close to retirement or you're in retirement, that should be a huge red flag. Those of us who remember the 08-09 crash, and a lot of us at that time were in our early to late 40s, many people lost half of their 401ks in that crash. And while the pundits will say, oh, that was only 14, 15 months, no, it wasn't. That 14 or 15 months may be their technical definition of how long it lasted. But if you had money in a 401k in 08, it took it until 2013 even to come up to the previous level and break even. 5 years. Now, do you have 5 years right now of negative returns for you to wait and hope to break even with your retirement money? That would be a no for almost everybody. And you may think, well, you know, I am kind of being silly because I've had these investments so long and I don't know why I'm just worried now. They've always been good investments. It is very normal for your risk tolerance to go down when uncertainty goes up. So even those investments that have been great investments all this time, they can really hurt you. But there's an easy solution. Within 401ks, IRAs, 403bs, those tax-advantaged accounts, Most of them have this slate, this list of different funds you can be in. And y'all will remember that from when you set them up probably. You had to pick some funds. And there were things like International Fund and Small Cap Fund and Growth Fund. They have names like that that are really generic. But within that list, there is always an option for like a money market fund, a bond fund, something like that that's a lot safer. All you have to do is move your money into that fund. Pick that option. That's all you have to do. Almost everyone can do this online. And basically by doing that, you can tell yourself, you know what, I'm going to do this. I'm just going to sit out for a little bit. And you can reevaluate here in a few months. If the market continues to do well, none of these concerns affect it, even though they already are, then you can hop back in. It doesn't cost you anything to sit out for a few months, and it will allow you to sleep at night. If the market takes a big crash, let me tell you what, you can sleep at night. Now let's talk a little bit about what I'm doing with my money. Now my account, because I started investing a year ago in June with my emergency fund, that was an after-tax account. It wasn't a 401k or IRA. So there are tax consequences for me to move that money around. I got out of stocks anyway. I would rather pay a little bit of tax on it, even though it won't be much, but a little bit of tax on it, than suffer through a huge market drop. Now that doesn't mean I'm not taking advantage of things in the stock market. I am. But I'm using a very small percentage of that money. And I am trading options. Now I'm not going to go into a whole primer on options. I use options on a very limited basis, only in specific circumstances. If I have a really big bunch of stock in one company, I might buy options just to cover any loss. But most of the time, the only times I use options are when there's a really volatile stock, when there's a really volatile market, or when there's a really volatile stock and a really volatile market, which is where we're at right now. So many stocks are getting extremely volatile, and the market itself is being very volatile. So it's a good time for me to use options, but I'm very careful. I only use options in a way where I know 100% what my loss is going to be. Options can be very dangerous because you can lose a whole lot more than you actually have invested, and I'm careful not to do that. And again, I'm only using a tiny percentage of my assets to still take advantage of the market, but not be exposed to a possible downturn that could really be harmful. Now, something else I did was I texted everybody in my family, like, hey, you need to move your money, you know, and they all did. They all did. Especially my siblings, they remember 08, 09. At that point, I wasn't working for a corporate employer, and my brother had just started, but my sister had been working for a corporate employer for a number of years. She was in her mid-40s, and that loss in her retirement account was extremely painful. And I know some of y'all experienced the same thing. There were also a lot of people about that time who retired, and my sister-in-law's father had just retired, and he lost half his retirement. And a lot of that was just complacency. I mean, you can look back and say, oh, he should have already moved that money into something safe. But you know what? When the market's going up, you get really complacent. You don't think about it. You really don't think about it. And even if you're in your 50s, you don't sit and think, oh, well, I'm within 10 years or less of actually retiring, so a loss could really hurt you. You don't consciously sit and think about those things all the time. But now is the time to be thinking about it. And that's one of the reasons I'm doing this video. Please start thinking about it. Get that money into something safe. Just sit it out for a few months and then reevaluate. If it's wrong or if the market continues to go up, you can get back in. It costs you nothing in your tax advantaged accounts. Now, if you've enjoyed this video, please click subscribe, and I'll see you next time.